Hello and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. The Lal Street is in Christmas spirits with the Nifty inching towards the 10,500 mark. Indian IT heavyweights like TCS, Infy and Wipro are the top Nifty gainers of the day after peer Accenture beats estimate in the quarter gone by, also hikes guidance for the full year. Adani Transmission locked in upper circuit for second straight day with gains of almost 10% after buying Reliance Infrastructure's Mumbai power business for $2 billion. The Anil Ambani Group company stock rises as much as closer to 8%. Wind power is now the cheapest energy in India. Tariffs dropped to a record low of 2.43 rupees per unit.
Well, I think the headlines summed it up as to what's happening in the markets. We are nudging close to 10,500, a stone's throw away from it, about 15 odd points. The markets are not at the high point of the day, but still trading close to the highs of the day. The mid caps and the small caps are not trading poorly. In fact, they are outperforming, yes. And I think close to 1%. Let's get the Nifty mid cap or the BSE mid cap and the BSE small cap indices. One of the mid caps and the small caps, and you will see what I'm talking about. The small cap index in particular, I think was trading with 3/4 of a gain at some point of time. The BSE small cap, 3/4 of a gain. So these indices seem to be doing okay for themselves. And then when you pull up the heat map, you will see that technology to an extent is doing rather well. Maybe bought by Accenture's numbers, but the last couple of days, I think technology stocks have been doing rather well. And the heat map will show you there is strength in Wipro, strength in TCS, which is the top performer. Oil and gas seems to be doing okay with ONGC and Reliance, both of them in the green. And State Bank of India, amongst others, is not doing too badly. We don't have too many losers. Some losses in HCL Technologies, but remember it had rallied 2.5% in trade yesterday. So some losses there, but otherwise not too many losers. And that is auguring well for the markets. Volumes would be thin compared to what happened in trade yesterday. And also the year end, a long weekend. You don't expect the volumes to be really big. But let's wait and watch. During the next 1.5 hours, volumes could change as well. But the mid caps and the small caps, Pradeep, a clutch of names seem to be doing rather well at the broader end of the spectrum. And Pradeep Pandya will just join in moments from now to talk about those mid caps and the small caps. Pradeep, how are they looking?
Definitely well. There is Christmas spirit on the Lal Street, as Navneet mentioned earlier. And if you look at some of the interesting sectors, PSU banks are doing well today. Maybe after that, the RBI report that came out yesterday, and it talks about NPA pressure really peaking out. One stock which looks interesting here is Allahabad Bank, among the mid-cap banking stocks which has moved up today with good volumes. ADAG and Adani Group stocks are in focus, but Adani Power is a stock in mid-cap space where traders are really getting active, because maybe Adani Transmission has already given the moves and people are now finding opportunity here. One space that looks interesting is Tire. If you look at MRF, look at CEAT, both these stocks have done well today. Infrastructure space is also holding on. HCC is an interesting bet here that was recommended by one of our experts, Mukesh Singh, I think in the morning in Indian Open, and the stock has gained 5 to 6% in today's trade so far. In the same infrastructure space, you have Delhi Buildcon that is moving up on the back of a new order that the company has received. Sandesh is another interesting stock we have been tracking since yesterday. Stock was logged at the upper circuit for better part of yesterday's session. Today is also up 16%. Aarti Industries is moving up on the buyback news. If you look at those 3-4 stocks that were active yesterday, especially in last hour of trade, look at DB Realty. This is the only one which has been holding on to its gain, still logged at the upper circuit. But RCom, after moving up for last 2 days, has come under pressure. Unitech has also corrected today. And IFCI is another stock that moved up yesterday, especially in second half, is also coming under some kind of selling pressure.
Pradeep, we're just 9 to 10 points away from all-time high levels on Nifty as we speak. So 10,494.4 is exactly where the all-time high level stands. So let's wait and watch by that towards the end of the session we're able to hit that mark or no. But if you look at the trends that we're getting from the futures and options market, at least the options data is pretty positive. If you look at the India VIX, that's receded to levels of below 12. So that's working well for the markets. And that's not it. Today is the day for the second straight day, actually. We've seen unwinding coming for a couple of call strikes. So that's a very positive sign 10,500 call strike, which is sitting with maximum open interest, has seen a bit of unwinding, which is telling you the call writers are running for the cover as and when the trend suggests that the Nifty can hit the 10,500 mark. But we've also seen a heavy put writing coming in for stocks for strikes like 10,400 as well as the 10,500. That too is suggesting a bullish sign. What can be the trading range now? 10,350 to about 10,550 is what somebody should look at if somebody wants to trade at least for the next 5 to 7 days. But in terms of stock futures, just two stocks I want to highlight. Mindtree has touched its fresh 52-week high. The counter has gone up on very high volumes on the cash side. In fact, do watch out for the delivery data for that. And even on the future side, the December futures of Mindtree have seen significant long positions coming about. Open interest higher nearly 16%, and the underlying is trading with gains of 4.5%. The other one Pradeep too spoke about was Allahabad Bank among the PSU banking lot. The PSU banking index has been outperforming since the word go. So look at the stock. On the cash side, the volumes are really high, but if you look at the futures data, the long positions are there, but for a stock which has gone up almost 4%, you would expect more of open interest to be added there. So it looks like more of cash-based buying is what one is seeing on Allahabad Bank.
Well, the Sensex hits record highs, crossing the earlier level of 33956. So we've had a record high level for the Sensex. The Nifty is stone's throw away, about 12 odd points. So good time to get in a fundamental voice on the show and try and talk about how would this next truncated week look like. Prasanth Prabhakaran, Senior President and Chief Executive Officer at Yes Securities, joins us on the show. The bigger question to Prasanth would be, what does calendar year 18 or the first month of calendar year 18 hold in store as well? Prasanth, good having you. Thanks so much for joining us on Bloomberg Quint. This is Neeraj here. Good afternoon. At record highs as we end the year, you couldn't ask for a better thing. But how does that set us up for the first month of 2018, which has earnings, which has the budget, and both very crucial events?
So it has been a good year. A 27% return is not bad, I guess, from any investor's perspective of. Our feeling is that the Q2 results that have gone out and the Q3 that have gone in are going to come in are extremely good off. There have been a lot of positive signs that have happened. You have a lot of sectors which have shown remarkable jumps. It could also be because of the base effect, but all heartening signs that have started showing up slowly and steadily. You have auto ancillary numbers which have grown practically by 20% in the top line that is there for Q2. And we expect that outperformance to continue. A large portion of that outperformance in auto was because of CV sales doing well off. So structurally, a lot of things happening. So CV sales doing well, it augurs well, saying that maybe the movement of goods has started across the country. FMCG sales has grown by around 4% over and above your Q1 growth that was there. Again, a positive sign. The only few sectors which have done badly are actually your capital goods and your telecom, which has been there. They have been badgered out of shape, telecom, especially because of the pricing pressure that is there. So a lot of green shoots. There is also talks about expansion. Private capex has been talked about. Tata Steel has talked about it. Raymond's has talked about it. You have seen Dalmia Cements now talking about picking up a unit and ending up building in capex on that side of. All positive signs which augur well, saying that there is action on the ground that is starting off. Things are looking better off. And you have advanced tax figures that have been started rolling out, which shows that there is an increase of not approximately greater than 25-30%. A lot of positives that I can see of. So the worst case scenario that I can think about for the Nifty still is around 14 to 15% that will be there. And if earnings do pick up from Q3 that we anticipate, I think so we'll have an equivalent year as we have gone by even now.
Okay. So all these positives that you talked about, Prasanth, how do they really translate into earnings? Are you expecting earning surprises going forward? What kind of earning growth are you estimating at this point of time for next few quarters?
So if I look at the numbers that have gone by and the number that we are expecting for Q3, Your auto numbers, the operating margins have gone up. It was at around 11.2%. It is at around 14.5% that it has closed at for the September figure. It was at around 13.5% year on year that was there. You look at all figures, leaving aside the few sectors that I talked about, Q2 was a remarkable change in the numbers that have come out. It was way beyond expectations of most of the analysts, even from our desk. And we continue to expect that to happen. You have events that are there, unfortunately, for the next year, which are large. You have budget, fiscal has to be tracked. Fiscal deficit shouldn't go out of shape because the expectation is that they have to cover up the areas to make sure that they come back into power in FY19. You have 3 large elections that are there, MP, Rajasthan and Chhattisgarh. All 3 trader belts, all 3 affected by GST, a large rural population again along with that. So you have your problems, but the way the trend has started, basic numbers that we are able to see on the table for Q2 which has gone by and Q3 which we are anticipating, I think so we have a good year ahead of us again.
Prasanth, you mentioned Dalmia Bharat acquiring Murli Industries. Well, I think they got the benefit because there were not many bidders, so to say, for that plant. And that was a deep haircut that one saw of 70 to 75%. Is it setting the tone for plants like Bhushan Steel or SR Steel going ahead that the haircut could be in that range of 40 to 50%?
So the way I end up looking at it is that it's a sign saying that the entrepreneur who was risk averse for the last 8-10 years has started to finally show his mojo. He started to end up taking a risk which was missing from the markets. He can see changes that are there on the field. And I anticipate that next year you will see a lot more of mergers and acquisitions that will come in. Once that happens, there are 2 things that will happen. Either you take over an enterprise which is doing extremely well, which is operating at around 85 to 90% capacity utilization, and you as a large entity are at around 70%. The average is at around 70 to 72%. So there will be merger. You will want to end up getting in a person to get that fill-up for the next rung of the market chain that you end up seeing. Signs next year, both resolution of your NPA crisis for your PSU banks will also end up showing a lot of mergers and acquisition opportunities which will be there. It will be an interesting year for investment banking is what my feeling is.
Shant, what did you make of this one transaction that has happened? It's just an excuse I'm using to ask you about infra, but this Reliance Infra Adani transmission transaction, if you guys have thoughts here. And the part 2 of my question is the kind of excitement that the road players have. The last 1 week, almost all of these companies have done well. Order books have swollen. What are your thoughts here?
So the Reliance story of the sale that is happening with Adani, the fact remains that the ADAC group was already under stress because of the high debt that they had on their books. They had to make sure that they lighten up debt. Otherwise, you would have had a crisis which would have been of a different sort altogether. And thankfully, the promoter is moving ahead in that direction. They are trying to find solutions. They are trying to sell assets to end up making sure that the debt burden over the entire group comes down. Needless to say that all the entities are attached to each other. You have maybe you have corporate guarantees that are floated around from each other, such that you have debt that they would have raised at some point of time. All those solutions coming in. That is why the possibility of a solution getting provided is what took the entire group up for the last 1 week or so. And if that gets translated into finally debt coming down to reasonable levels and then you're driving business off, there cannot be anything better off from the group level portion. As far as the infra play is concerned, the same logic holds good. Wherever debt is out of shape and you are able to get a resolution, finally you've got to understand that the infra play that is going to play out in the next 2 years, the kind of contracts that we are talking about, if I'm not wrong, if I total up just 4 segments put together, the road, the rail, the canal network and the airports that you're supposed to construct, you're talking about a 20 lakh crore expenditure from the government. If that is the size that you're talking about, there are very few infra companies in the country who are capable to do that or have the balance sheet strength to end up executing such contracts. So the larger ones have to come back, and there needs to be a resolution in the larger book size, which augurs well again, because your NPA crisis will get resolved. You will have resolutions which will come in. Lot of things that will get translated in the next couple of quarters, which will help the economy become better.
So, Prashant, out of these two groups, Adani and ADAG, would you like to pick up any stock to play this story, or you have something else in mind?
So I am not getting into stocks today. Frankly speaking, the excitement of whatever we have seen as far as results are concerned is gives us a lot of hope of.
How do you really play, some of the most favored stocks of this rally? And again, I just want your opinion on a set of stocks like, say, Maruti in auto, which has been the hot favorite, has gone all the way up to 10,000 now, is correcting a bit. You have some of the financial services, private names, NBFCs like Bajaj Finserv, Bajaj Finance. These have been the stocks to buy, over last few years. What's your view here? Are you booking profit in some such stories and shifting your money, or you think they can still perform?
So the advice that we have been giving clients is that keep your stop losses in place, but ride the rally that is going on. Please understand that the present valuation that has been given because liquidity has moved from pure retail play into the hand of the fund managers. They are giving valuations to those companies which have delivered on top line and bottom line performances, and there is scope of. So if you come down to Maruti, a 28 multiple for a company which has an inventory that they have to deliver with a 6-month waiting period for most of their top line counters. You talk about Baleno, you talk about Swift, you talk about Ciaz, any of their models. You have a waiting period ranging from 3 to 6 months. Obviously, that means that the demand is not going to slow down. And they have a pricing point, they have a vehicle for every price point that is there. So it is a story that you have to play on. It will continue riding, they'll continue growing at a particular pace, but keep the stop losses because it is at high valuations. When you compare it to the other peers in that market, they are at fairly high. You have a 35-40%, but you'll ride the rally. You'll keep stop losses in place, but ride the rally out. And that holds good for most of your top rung counters. You talk about your private banks, NBFCs, I will still keep stop losses which are around 15% from the top and still ride the rally which is there in the future.
Prashant, before we let you go, looks like the party is going to continue, that's what you're saying, going into 2018. But what could be the major headwinds for equities market globally, so to say, in 2018?
So growth is, so we have been seeing signs of global growth that is coming in and the US tax reforms, the moment it gets translated off, clearly adds to the bottom line drastically off. 16 trillion economy, if you're going to get a growth in earnings, which is going to be to the tune of around 15% because of shaving off of tax, you will have money flowing back off. A liquidity pull-off is likely on the cards off. You have obviously the simple fact that growth is coming. That is why they are raising interest rates to that extent. So money will flow off to that extent. But the Indian story as far as liquidity is concerned, thankfully, has been still going strong for the last 5 to 6 months. There is a slowdown this month off, but I think so we'll continue to get money at least to the tune of around 15 to 20,000 crores month on month. So liquidity remains a concern. Growth globally, if it takes off, it augurs well for a few sectors in our economy. But largely, when you think about it, there could be a liquidity pull-off which will be large.
We'll leave it at that, Prashant. Thanks so much for taking the time out, and festive greetings to you and your team.
My pleasure. Same to you.
Well, that's Prashant Prabhakaran from Securities. By the way, the markets have come off completely. 10,470, or 10,469 rather for the Nifty. The Nifty Bank too is pulled back, 25595, and that is absolutely flat. So we're kissing distance of new highs for the Nifty. The Sensex in fact touched new highs and since then have come off in the session. In a few minutes from now, we'll have our technical experts on board to try and figure out how to approach this last 1 hour of trade. But meanwhile, let's talk about a space that is arguably the sector of the day. The index has gained about 1%, or at least had gained 1% until 15 minutes ago. After the exchange, or still up about 1%. And the reason being the Accenture numbers. Let's first get in Agam to talk about what really stood out in those numbers. Agam?
Well, Neeraj, I'll start off with the top line, which grew 10% on a year-on-year basis and on a constant currency terms. And that's the big takeaway, because not only has it beaten street expectations, but we've also seen it beat its FY18 guidance of around 8%. That is the upper end of the guidance. Moreover, Accenture has also upped its lower end of the guidance from 5 to 6% right now. And that's the reason why, we've seen an upbeat moves for a lot of these Indian IT companies in today's job trade. What stood out in this particular quarter was application services and operations, and also your strategy and consultancy segments have started to see improvement. What does this mean for Indian IT? Of course, this means this particular quarter signaled the industrialization of digital services, and we also seen improvement in the US as well as financial services vertical. So in that case, Infosys, TCS and Cognizant stand to gain. And of course, speaking of an improvement in ERP as well as applications, of course, we've also seen substantial movement in consultancy as well. This is again a positive when it comes to Infosys or HCL Technologies. So largely, the numbers of Accenture positive, at least shedding a positive when it comes to some of these Indian IT companies going forward.
Okay, thanks Agam. Thanks for putting that into perspective. Let's wait and watch if indeed there are more upsides for the space over the course of the next 6 months and the numbers come in as well or no. But hey guys, did any of you buy a card this season or buy something this season? Arguably, if you've done that, you've done it from one of the shops like Archie's. I mean,
These days you buy gifts more than cards, I guess, no?
Yeah, but well, they stock gifts as well.
Yeah. No, but unfortunately, we've not bought.
Okay,
so
but maybe
far.
people have bought. So let's
We may
ask.
just buy, actually. The season's just starting.
Okay, yeah. So that's true. With the onset of the holiday season, one place that sees maximum number of footfalls and gifts and greeting card stores. The most prominent name amongst these players is Archie's, at least the most well-known name. So let's talk to the management about how is this season shaping up. And what's the outlook for calendar year 18? Joining us on the phone line is the business head and promoter, Raghav Mulchandani. Thanks, Raghav. Thanks so much for joining in. How is this season shaping up for you?
Well, first of all, I'd like to start with wishing all the viewers and members season greetings for the Christmas and the New Year that is ahead. And the situation definitely is very positive right now within the company. Looking at how we're moving forward, already we are targeting an EBITDA of 8 to 10% within Q3 and Q4. The footfalls are increasing day by day. The stores are doing well. And you see, Archie's itself, to where it's going, it's important to understand and reflect on where it's coming from. Archie's is one unique brand which has faced the test of times and managed to keep on evolving. I remember very clearly when e-greetings were launched and the market felt that the time of Archie's is over. But that was 16 years ago. And there are many examples like that. But having said that, Archie has taken on a lot of corrections in the last 12 months with the goal of making the company more profitable. As over the last 5 years, the company's top line and bottom line have been stagnant and shrinking at the same time. So that has been the goal, and that goal is pretty close. The closure of loss-making stores have benefited the company, and by the end of this financial year, I can confidently say that at least 90% of all our corporate stores will be in profit. Our franchise strategies are taking place. We have rejuvenated our franchise policy and looking forward to add on more franchises to the business. So overall, things are pretty positive at Archie's.
To understand, if you could tell us, what is your diagnosis? I mean, why were the sales stagnant, and what are you actually trying to correct here?
So at the time, our sales majorly started to stagnate from the past 5 years. There were major disruptions in the market. Retail itself was going through a lot of change. There was a lot of competition from the unorganized market and also the marketplaces in e-commerce. At the same time, the bottom line started to shrink because of the rising operating expenses that the company was incurring relating to the sales. Greeting cards itself as a category was struggling because it was more of an occasional than an everyday business. But to counter that, we have been diversifying into other segments, other products, and which have been contributing and keeping and covering our greeting card sales. At the same time, in the race for top line, the company ventured out into the FMCG distribution network, which came at a very high operating cost, and the sales were not at par accordingly. Therefore, the company had to take the decision to close it down in the last 10 months or so. So these are some of the factors that hampered Archie's growth, and the operating expenses and the needed rectification to make the company profitable, because the expenses that the company had incurred based on the projected sales were not matching, and so that required the rectification, which is helping right now.
Raghav, to put things in perspective then, you said that the company has also been shutting down the loss-making businesses, and you also said 95% of the loss-making businesses will be shut soon. Tell us in terms of numbers, because the financials of the companies have not looked good for multiple quarters now, but in the last quarter you guys did turn profitable. Going ahead, what sort of growth can one expect on the top line, bottom line, and also if you could give us a guidance in terms of what sort of margins are you targeting at least in the next 3 years?
Okay, so when I said the figures I gave was 90% of my company-owned and operated stores. So that's I was discussing about that segment. Looking at the top line this year, the focus again is on the bottom line. We want to cover our exact losses, which were incurred in Q1. And moving forward, the company is projecting a top-line growth of at least 8 to 10% year-on-year, with the margins, the EBITDA, to sustain at 12%. That is our target, and that's what we're going to achieve.
Okay, I just have one question. I don't know if your question got answered, the numbers at least. Just wanted to know if the business prospects about online and new plans for e-cards, what is the revenue potential out here? Again, if you can give us some numbers.
So Archie has been in e-commerce since some time, but it's been taking small steps at a time to understand how the market works. E-commerce is contributing to about 5% of the overall business and is growing at about 10% year on year. And so we are looking forward to online as a scalable and sustainable business, and it's going to become an important contributor to the overall business in the next 5 years.
But as of now, Raghav, has the business been impacted adversely because of e-commerce? As more and more people are now, buying even gifts online now?
Well, not so much in our case, because the online disruptions have mainly been towards the white goods and fashion, not so much towards the gifting side of business. Even within our e-commerce, Flipkart and Amazon have been affiliates at a time, and there was not a great response in our category compared to the response that we get on our own website. And even now, the 60 to 64% of our complete business comes from our own retail, which now seems very positive looking at the numbers. So I'm sure there have been disruptions, but more disruptions have been within the company itself in terms of managing its own operations and making them more efficient.
Raghav, before we let you go, are the promoters looking to increase stake in the company? Because as per the recent update on the Bombay Stock Exchange website, it says one of the promoter entity recently bought shares from the open market.
I cannot comment on that right now. I don't have sufficient information to provide. But yes, a promoter has picked up a small stake, and if in the future they will, I'm not too sure right now with the accuracy of my knowledge in that.
We'll leave it at that, Raghav. Thanks so much for taking the time out and joining us and giving us that perspective. By the way, the equity markets have come off a bit. The mid-cap index, I think, is trading flat or marginally in the red. The BSE mid-cap or the Nifty, mid-100 index is now trading a bit of a red. So, it was surprising. The markets were so strong going into a long weekend. I don't know if that's an intraday pullback that is happening, and we'll probably end flat. But let's wait and watch. For now, off from the highs of the day, certainly. What is not off the highs of the day, though, is CET. It's counter in spotlight as well, because it's been gaining for 7 straight sessions and has hit a fresh record high in the current trading session. Let's head across to Pradeep, who's pulled up an analysis on this. Pradeep, what is a flag breakout?
So a flag breakout, if you want to look at, is a flag starts from here. This is the pole and a kind of flag building here, and then we finally see a breakout from this. You can always argue and say, is it a flag or a pennant or whatever it is called? It's a consolidation zone and is defined by various names by various technical analysts. What is significant is you look at the period of consolidation. So we kind of peaked in June, and June onwards for almost 6 months stock has been consolidating in a narrow range of say 200 to 250 points, and now decisively, and by the way this is weekly chart, so this week finally we have seen a strong breakout where we have where the stock has been able to take out the highs of last 3 months actually, and also moved out of this consolidation zone. So it happened, and after that we have finally taken the previous high as well in today's trade, and the stock has gone to a new high. So that's a decisive breakout. The stock is back into a blue sky territory. What is also interesting is if you look at the movement of CET over last several years, you'll realize that the stock has been on a bull run for almost 3 to 4 years, and we have seen such consolidation and then a breakout, again a consolidation and again a breakout. This kind of pattern has come before also. If you look at what happened between October last year till February, March this year, the stock consolidated for 4 or 5 months, and then again we saw a sharp up move. So maybe it's all set to repeat that pattern. What else is supporting this case? If you look at the volume this week, it is highest in last 6 weeks. If you also look at the MACD on weekly, it has given a crossover. So it's supported on oscillators as well. So there's definitely a decisive breakout, looks like, on this weekly chart of CET Limited.
Flag breakout. We'll watch out for this term, and let's wait and watch if indeed the breakout does, or in fact, as in Pradeep's terms, I think has already started. Let's see the extent of this breakout in the near term.
Definitely. So from a consolidation, you have moved on to the next leg. How long will it go? I'll refrain from giving any targets, although every pattern has certain rules based on which you can talk about the targets, and we'll leave it on our guests to really define that pattern and come out with their targets.
Okay, some news bits on your screen before we move further and get in our experts on board. Talwarkar's, the demerger plan has been approved. The NCLT has approved the demerger plan of the lifestyle unit of Talwarkar's. This should be net positive for the stock. Typically, a demerger of any sorts is done because there could be some value unlocking. In most cases, we've seen this turn out to be true. There could be a case here and there odd, wherein it doesn't lead to value creation for the minority shareholder and the promoter, of course. But let's wait and watch. 334 or 333 and counting for Talwarkar's, up another 5.5% today. It's been a good year. For most equity stocks, it's been a good year, but for Talwarkar's in particular as well, it's not been a bad year at all. From hovering around this 180, 190 mark for a really long time, it's now started to do rather well for itself. So 5.5% higher for Talwarkar's today. Let's bring up this year's chart for Talwarkar's and show you what the stock has done over the past 1 year as well. As I was saying, it's turned out to be a good year for Talwarkar's. This year about 34% and peaking at the right time, trading very close to the high point of the day. Let's wait and watch if indeed this does turn out to be true. But the markets still holding firm. Let's get in our technical experts on board to try and talk about how are they approaching the scenario today, with the mid-cap index now just dipping into the red. Rahul Randeria joins in to speak about his thoughts on the markets and specific stocks. Rahul, good having you. Thanks for joining in. This bit of a pullback that we're seeing, if you were to initiate a trade for the next 1 hour, if you do that on any of the key indices, what would that trade be?
First of all, looking at the current setup, the every dip has been bought at, but the intraday range in the Nifty as well as Bank Nifty is not major. But looking at the larger degree pattern, the target seems to be higher from the current levels. Definitely for 1 hour, if anybody wants to trade, can buy at current levels. But the upside in Nifty would be maybe maximum 15 to 20 points. But if anybody wants to take a positional view and a trade, one can buy at current levels with a stop loss below 10,410. Positional target would be 10,575 to 10,600. So definitely any correction should be used as a buying opportunity. And in Bank Nifty also, one should buy on dips for a positional target of 25,900 with a stop loss below 25,450.
And what's the time horizon for this positional trades?
Maybe next week till expiry.
Okay, so next week till expiry. Any individual stocks that you're betting on, Rahul?
Yeah, definitely. There are two individual stocks where the momentum is building up looking at the current setup. First is in Sun Pharma. Swing traders can buy at current levels and on corrections to 525. Short-term positional target would be 560 with a stop loss of 521. My second buy call is in SBI. Swing traders can buy at current levels and on corrections with a stop loss of 311, and short-term positional target would be 339.
And won't you buy Infosys or TCS or maybe Hexaware in mid-cap?
Yeah, Infosys, TCS, both the stock has moved for a very long period of time. Though the movement have been very slow, but from these two, I'm liking TCS because TCS was into deep oversold territory a couple of days back. We have seen a rally. Today is also in fact a good run up in the stock. Any cool of maybe 15-20 rupees should be used to buy at the lower levels with a stop loss below 2580, and short term swing target would be around 2720 rupees on the upside.
Pull up the chart of Indigo. That stock's also seen gains of almost 3% in today's session. We can check if its peers are also doing well. Indigo almost just at about days high. Let's just check what Jet and SpiceJet are doing currently. If Jet Airways, okay, not doing much. Also, the stock is into the F&O band, so the moves could be restricted there. And SpiceJet is just about trading flat. Rahul, anything on the charts for Indigo 3% higher?
Yeah, looking at the Indigo pattern, the stock has been into a sideways mode, and today it has shown some sort of strength at the lower levels. In last 3 days, the range of the trading has been similar, and stock is poised for an upside rally from the current levels. Therefore, one can buy with a stop loss of 1120 on the downside, and positionally I feel that stock can test the levels of 1238 on the upside.
Over the last 3 days, Arcom has been the most talked about stock, one of the most talked about stock. If you look at the movement, Rahul, what do you say? There would be some traders who are still sitting at maybe some bit of gains, and there are some traders who got in late and now staring at losses. What's your call for them?
Yeah, Pradeep, I'll give you one example of in the PSU banks 2 months back, we have seen intraday rally of 40%, then an extension of 10% on the next day. After that, the price has started drifting lower. So similarly, in the case of Arcom, we have seen 45% of rally in a single day. Another day it went up by 7 to 8%. Now again the prices are narrowing down. The volumes are also drying up. So definitely I'm not seeing any major upside from the current levels. Anybody who has luckily bought at the lowest in the range of 12-13 rupees, one should book profit at these levels. I feel that stock can again drift down to the levels of 13 and 14. And that would be the area where one should take review it and then take a call. At this point of time, I would not recommend to buy, but to book profits.
Okay. IT still holding out, TCS holding out, ONGC holding out from amongst the other large cap names. It's not all bad for the markets. Still about 20 or 18 odd points away, so not too dramatically off from those levels as well. But let's wait and watch if we hit those levels during this session. Anand Tandon, market expert, joins us right now on the show with his thoughts on what's happening around. Anand, good having you. Thanks much for joining in. There are clusters which are doing well, as is the case normally, but more so in today's session. We've had a bit of a move in IT, maybe led by Accenture, quite a bit of a move in some of the construction or road infra companies as well. And I think the optimism is palpable there. And selectively, stocks in the transport and aviation space seem to be doing okay. What do you like to start off with?
Well, as you mentioned, IT, I think, is coming out of the deep recession that it has been in. Not to say that there is a tremendous upside in terms of sudden growth, but clearly, as you mentioned again, that Accenture read-through does tend to point out that the digital contracts are becoming larger, and that obviously will mean that services company can again do a little better than what they've been doing in the past. I would extend that to not just the IT companies. I think there is a general export market. I think will also see an uptick, whether it is textiles, fine chemicals, or specialty chemicals, or other related areas, because that's been one of the sectors that has been kind of not performing that much as the rest of the market over the last 1 year. And I think it is now time that it will start to play catch up as the global economy also picks up.
Okay. Anand, in last few minutes, if you see, or rather last 1 hour, e-clerk services has turned out to be an outperformer. That is on the back of company's board approving the buyback program. The stock is quoting higher by around 10% in today's trade. Do you track this stock? Any call now?
No, I would like to comment on a specific, but to me that looks a little more expensive than some of the others.
Okay, Anand, just a follow-up on that. So if indeed there is a bit of a slumber that IT may be coming out of, would you bet on companies which have a higher digital presence? That seems to be the obvious answer. Or would plain vanilla outsourcing be making a bit of a comeback and valuations give you the comfort to maybe go out and buy? And therefore the call will literally be between buying a mid-cap IT company which is trading at maybe 15, 16, 17 times and growing at those levels versus buying a large cap IT company, maybe 12, 13 times, growing at about 8, 9%.
So I think for now, it looks like US is still growing slower, at least though it's a much bigger market, it's growing a little slower than perhaps parts of Europe. So to some extent, it depends on where the geographic importance is for specific companies. So for example, Tech Mahindra and HCL Tech, which have larger presence in Europe, will tend to benefit more than perhaps an Infosys or a TCS, though TCS's order today obviously is good news. So overall, I think it's a question of the geography that you are in, and smaller companies obviously will make a bigger difference because if the order book were to suddenly come up, the smaller companies, the delta will be higher. Digital, without doubt, is the place to be. So, broadly mid-cap, especially with those which have a large non-US presence, is an obvious place to be looking for.
Anand, besides IT, the other pack which has not done well for 2017, and it's a year where you saw rally for most of your broader market stocks too, so it was a good year in terms of mid-caps as well as small-cap counter. Going into 2018, do you think can one afford to take that risk because the valuations have corrected a lot for these marquee pharma companies? Would it be a good bet to buy into any of these pharma stocks?
So the way I have been approaching pharma is actually to be looking at it as an SIP. So, you regularly keep buying a portfolio of companies. And that is the best I could recommend. For most people, that would translate into buying one of the 2 pharma funds, which are listed in the market and run fairly competently. Specifically, again, for pharma companies, the problem remains the US for the largest part. So those which still have most of the revenues coming from US will continue to drag a little bit, whereas the rest of the world, including Europe and other regulated markets, as well as the emerging markets, are doing reasonably well, or at least better than what the US is. I see the US pressure also coming off a bit, but not in the immediate term, because the compression of generic values is still going on. In the rest of the markets, the pressure is not so high. So again, Europe would be a great place to be if you are looking for companies which are going to show better growth. Broadly, I think, as I mentioned, with all export companies, including pharma, it is definitely time to look at better performance than in the last 12 months.
How do you look at the Adani Transmission Reliance Infra deal that was announced yesterday? Who gains by how much? And is there an opportunity for an investor to participate really through any of the group companies?
Well, obviously, the company which is receiving the cash will have will actually do a little better, because in this particular case, it appears that they will actually become debt-free, at least at the standalone level, which is a great thing for that group because they've been mired in debt and a lot of other issues. So Reliance Infra to me looks okay, because the way they have actually executed on the plan they announced almost 2 years ago seems to be on track. And once you get out of some of the regulated or less ROE generating markets, and if the defense portfolio actually builds up as it is showing signs of, it can actually do quite well, and valuations remains undemanding. The basic problem with defense, however, is the lumpiness of orders and the uncertainty as to when they will come. So once that becomes a little more clear, I think that would be an area that would be of great interest. Transmission, of course, is a steady state business, and Adani has been executing extremely well, but it's finally a regulated play, and I don't think that you will look at supernormal returns coming from there. And given the valuation, you may find that the returns are somewhat subdued.
Let's just look at a couple of stocks from the broader markets. DB Realty, we know it's been locked in upper circuit since the morning session. That's up 20%. In Swift Laboratories, look at this counter. It's locked in upper circuit. Not only today, yesterday also it was up 20%. Day before yesterday it was up almost 10%. So this is having a good week, clearly, so to say, for In Swift Laboratories. 61 is the level where this counter trades. The other one is Ester Industries. This too was up in yesterday's session, and today it has been locked in upper circuit. Ester Industries is the stock that we're talking about, and Bidla Money since the morning session has been pretty active in today's trade, so that's also trading around the levels of 90. And Sandesh is the one which Pradeep highlighted. We also spoke about this counter yesterday. It's a Gujarat based publication, so that's also having a good day. Sandesh is up almost 15%. Rahul, anything, the stocks that we mentioned on the charts, they look good?
See, all of the charts, I was just looking which the names which you mentioned on, but the stocks, all the stocks have rallied significantly in the last 2 days. So at this level, it is not advisable to buy at the current levels or enter because the stock has rallied very sharply, and then the move was 90-degree move in a very short span of time. So at this point, at these levels, many stocks are were illiquid, and just in 2 days we have seen liquidity spiking up in the stock. So at these levels, I would recommend investor or traders, those who have bought at the lower levels, to book profit at these levels. Wait for price to take some cool off or make some consolidation, and then take a review. But at this point of time, no stock seems to be favoring the risk reward to enter at these levels. So I would avoid, but yes, definitely those who have bought can book profit at these levels.
So Sandesh is one stock from media sector that Navneet talked about. It's mainly into print, but also runs a regional news channel in Gujarat. You also have two more television companies, actually, TV Today Network and also Network 18, that have been doing well in today's trade. Anand, do you have a view on media space? Anything that you like here?
It's a little fluid space. Broadly, if you look at valuations, the print media is the one that is the cheapest. And you can explain that only because globally it is a declining industry, but in India it still continues to grow. So if somebody is really looking at value, that's where it is. In terms of other parts of the media, again, content would be king. So any of these companies that you mentioned are mostly content generating companies. And if there is a reasonable valuation play there, I think it would be attractive. The part that I don't particularly like is the infrastructure part of the business. And though there are buy recommendations everywhere, my take is that the DTH players, etc., will suddenly find that they are getting a lot of hit from the internet and perhaps even the cable companies. And besides, to me, there doesn't seem to be too much of a moat there. So broadly in media, I think the ones that seem to me to have the best value are actually the print cum digital companies.
By the way, I want to mark a couple of names. One of them is Bombay Rayon. Now, for the last few days, it's been on a lower circuit. I have no comments on how good the business is fundamentally or otherwise, but I certainly have a comment when there is a message, innocuous little message that keeps on coming on my inbox, telling me to buy Bombay Rayon Fashions every single day and ask me to buy at least 10,000 shares to make a meaningful, sizable money. And well, the last few days is testimony to this. So be very careful when you indeed believe in such messages. Bring up the 7-day chart of Bombay Rayon and you will see what I'm talking about. I think this week it's really been taken to the cleaners. A 5% down today, but the last 7 days it's lost about 30%. It's essentially been this week when the stock has been locked on a lower circuit. Volumes, it's okay, but yeah, this week
so
about 32%.
The pattern, Neeraj, here has been, this week it's being locked in lower circuit throughout, but before that it was being locked in upper circuit, and that's how we've been seeing the circuit limits by the exchanges getting, I remember this was locked in upper circuit for around 3 to 4 sessions at a go for when the circuit limit was almost 10%, and when the circuit opens you see that selling pressure coming about then.
It's scary, you know.
Yeah,
I mean, we were just talking about this today with Somit and others, a clutch of names. We talk about a stock, next day there is a report that comes out from some unknown house as well. The stocks have been moving up for 4-5 days, and again, we're not trying to say out here that the business is good or the business is bad, but just the trading pattern in some of the stocks is fairly scary, and I just hope that few retail investors don't get trapped in a bad way.
So what it means is that free advice is more expensive than the paid advice.
Yeah, for sure. Well, but, unless it's coming on BloombergQuint.com, if you put it that way. The other one, The other stock, I think that just come off today. And again, yesterday, a brokerage note put up 2 and 2 together and said that Canfin Homes, maybe HDFC could be interested. Who knows? It may be the case. But that 4% stake by Canara Bank into Canfin Homes brings that stock down today. So a trading position built late yesterday when the stock was up 7% would have resulted in a 2.5-3% kind of a fall. And I would presume that traders, Rahul, who enter into trading positions from a BTST perspective, would have a stop loss which will not be as deep as 3%, right? The stops would have gotten hit if you entered into trade yesterday, into a Canfin.
Yeah, definitely. As you said, yesterday was a spike, today it is a cool off. But looking at the overall pattern, if we see the larger degree charts from June 2017, the stock has been under severe pressure from the levels of 670, and it took a pause around in the range of 430. After that, the sell-off was exhausted and stock started moving sideways. So it is making a base, and stock could reverse from these levels. Means from bearish it would turn bullish. So definitely at current levels, for BTST point of view, I don't think so. These are the stocks where people do BTST. But positionally, the stocks seems to be very positive. Any correction, further correction from these levels should be used to accumulate at the lower level for an investment perspective, at least for next 6 months. I feel that stock can again retest the swing highs, which was a major supply zone of 564. So definitely from current levels, any 2-3%, 4% correction should be accumulated from investment perspective, and one should place a stop loss below 430, which was the swing low.
Well, it looks like a news-driven move that one has seen on Canfin Homes. But let's also bring in Sarvendra Srivastava, who is an independent market expert who joins us on the show now. Hi Sarvendra, good afternoon and thanks a lot for joining us today. What are your top picks going into this extended weekend?
Yeah, very good afternoon. Not good news from my side in the sense that right from November for second week we've been maintaining that what started at for the Nifty at around 7,900 probably is getting over. Now with all the events now with Gujarat elections and also the US vote on the tax reforms, I think all those events now probably out. So till last week we were giving more option related strategies on the Nifty, but today I would think that I would go plain vanilla futures, and on the spot my view now remains that Nifty probably will fall towards that 9,700 mark eventually. So 10,000, 10,000 first target, 9,700 is the second target. I think as long as we are not clearing 10,706.60 on spot, and mind you, all stop losses on the calls for today would be on closing basis. So as long as we are not closing above that, my sense is that this is now looking like too much of froth, and a sharp little correction and a surprise little correction probably is waiting around the corner somewhere. So I would say that I would stay short and exit longs on the Nifty. So with that view in mind, all the three trades are on the short side. The first one being DHFL. I think clearly within the financials, this one is looking slightly more weak, has not probably fallen like a peer subset, and probably more room for underperformance here. But this is purely more a shorter term call. The remaining two are more positional, but I would like to short sell that for a week or so for a target of around 570 on DHFL on the downside, with a stop loss kept at 605.20. And the next call is a sell on Mothers and Sumi, where I think the stock can go down all the way to 330 levels, and I would short sell that with a stop loss at 397.10. These are spot levels, and on closing basis stop loss. And the last one is again one froth name, which is Havels. I think clearly it has run up too much in the last quarters, and my sense is that a correction here is also pending. So a retest of 500 psychological mark is minimum what I have put. It can probably go lower, but 500 is the target on the downside, and 566.60 is where I will keep a closing only stop loss.
Okay, so these are the picks coming in from Sarvendra. We talked about a few IT stocks, but Rahul, if you could look at two more charts. HCL Infosys, now this is not really an IT service company, and also Polaris Consulting. Both these stocks are buzzing and have gone up with significantly high volume in today's trade. What does the chart suggest?
The interesting chart in HCL Infosys, the stock has been moving very wild for a very long period of time. The swings are very intensive because since last 6 to 8 months we have seen the stock moving in a band of 43 rupees on the downside. Again it is inching back towards to 56, again going back to 45 rupees. So really it has been a hard time for the stock, but at lower levels the bottom line is the stock has seen lots of support at the range of 46 to 48 range. So definitely the momentum is picking up. Immediately the stock has a resistance of 57. Once the stock closes above those levels, then again it can retest the major supply zone of 61 rupees. So definitely the momentum is intact, but it will take some time because the stock has been a slow mover, and one should place a stop loss below 52 rupees. If we talk about Polaris,
hey, just before we move on to Polaris though, because you brought in HCL Info, Rahul, I just want to get a fundamental perspective from Anand Tandon here on this one. Anand, and then we'll move to Polaris, I promise. But the reason I bring this up, Anand, and I know you look at things with this mirror as well. If you recently look at the rights issue that HCL Info did, Anand, promoters subscribed heavily to it. And I think the promoter stake went up from 50% to over 62 or 63%. Now, there has to be a reason why the promoter entity will bring out a rights issue. Obviously, they bring it out at a price so that they'll be the ones who will be the subscribers. But increased stake by such a huge margin. They pumped in almost 420 crore rupees in order to pump up their stake from 50 to a 62 odd percent. The company's been doing well off late. I don't know if it's showing in the numbers or no, but this whole tie-up with the mobile phone companies, this whole execution of the UIDAI, do all of these, or are all of these telltale signs that people can look at these companies, even if not invest, but at least look at a company like HCL Info? Have you looked at it?
So the short answer to the second question is no, it has not been on my radar yet, though I did see the rights issue, and as you mentioned, the fact that the promoter has bought in a large amount of, has increased their stake big time is quite bullish. There is no question about that. I mean, there could be a lot of reasons for people to sell, but there is only one reason for people to buy, and which is that their expectation is that the future will be better than what they have seen so far, and they think that there is value in the stock. So the distribution business, of course, of HCL Info does look a little interesting, but I won't be able to comment on the actual numbers or anything of that sort. Clearly, a promoter buying is definitely a bullish sign.
Okay, sorry for interrupting into Pradeep's question, but now we can talk about Polaris as well, Rahul. You were starting to make that point there.
yeah, if we look at since December 2001, the stock has given a breakout of a very long consolidation of 16 years. And even on the shorter degree charts of monthly, last 3 months have been very significant in the stock, because stock has rallied from the levels of 220, and today it is just near to 400 rupees. Definitely, today's move has been after a consolidation of a couple of weeks. So definitely the momentum is picking up in the stock, but any dip should be used as a buying opportunity. One should place a stop loss below 350, and in short to medium term, stock can test the level of 440 to 450. So any correction should be bought with a very strict stop loss of 350.
Okay, let's also pull up Engineers India. That stock's seen a surge of almost 5 to 6%. If you could just pull up the intraday chart of that. Even on the future side, we've seen good moves in terms of open interest addition. That's Engineers India trading around the levels of 204. It's almost currently a day's high, and the open interest is also up around 8%. Sarvendra, on the charts, Engineers India with the move of almost 5 to 6%, would you initiate any long positions?
See, I think this stock is definitely in the list. If you want to put buy trades from here, it definitely qualifies for a buy trade. There's no doubt about that. And if I have to put numbers, I would say that 220, 215, 220 is doable on this one. It's definitely a better looking chart, and probably a chart which can probably go against the market as well. But as I said, looking at the overall setups and looking at the way the mid cap index and Nifty, Bank Nifty are behaving, I think you can get it at lower numbers. Definitely, it's not going in much below 160, 170. So if at all into this correction, if you get it at around 190, 200, 190, 185, 190, then it would be a better risk reward. But from here also, I think 215, 220 is doable, and it's a stock which is in the buy side list.
Okay, let's move on to the buzzing stock of the day, ultramarine and pigments. Wow, I confess complete ignorance to this, but Saloni's studied this, and she joins us as to why is it that this is the buzzing small cap of the day. Saloni?
So Neeraj, continuing its winning streak for the 6th consecutive session today, shares of ultramarine and pigments rose as much as 20% intraday to hit a lifetime high. Now, while trading volumes remain moderate at 6.1 times the 20-day average at this time of the day on the National Stock Exchange. Now, the stock has been buzzing on the back of a bulk deal when promoter Thirumalai Chemicals bought 0.7% stake in the company yesterday. Remember, Thirumalai Chemicals already hold 10.43% stake in the company as of September 2017. Now, in terms of business, it is a manufacturer of organic as well as inorganic pigments and synthetic detergents. Now, these chemicals are used by paint, oil as well as plastic industries. In terms of business, in terms of financials, the company has a market cap of around 1,000 crore and the company also exports to US and European markets, and the stock has almost returned over 120% on a year-to-date basis. Back to you guys.
Thanks for that, Saloni. Well, Ultramarine definitely has been a good story for 2017. The stock's more than doubled. But what else is doing good? Reliance Naval, that's up 9%. Couple of these Anil Ambani Group company stocks have been buzzing since yesterday. Today is the day of profit booking for stocks like Reliance Communication, which I've already searched 40% in last 2 to 3 session. But pull up the futures of Reliance Naval and see if there are any fresh long positions being seen there as the stock trades with gains of almost 10% right now. And last when I check, I guess there was some build-up seen on the future side as well. It's seen 13% in terms of open interest addition till now. Rahul, on the charts at 43.44, let's say if somebody had taken a long yesterday, should they be booking profits also considering it is an extended weekend, or you can carry on your longs?
Yeah, but I would not be able to comment on because of the compliance issue. I would not be able to comment on Reliance Naval.
Sorry, I'll take this question to Sarvendra. Sarvendra, how is it looking on the charts? Can one carry on their long positions here? They should book profits?
See, I think the data for this one is slightly limited, but whatever data is there, what I can say is that you are towards the all-time lows. This move has come from levels where probably the stock has always stabilized. So 35, 36, that area has been a long-term kind of support area for this stock. So now that it has started the up move and someone already has that trade, I think it would be better to, if you have a trade, then trail your stop losses and hold on, because possibility that this stock can test 47, 48 levels also. So if someone willingly wants to hold for another 10% and can trail a stop loss on cost, then probably you should be going in for it. But else, if the profits are decent, I think there's no harm in taking some money off the table as well.
Okay. Anand, another defense stock is Nelco, which is doing well in today's trade. In fact, it has been a performer over last 1 month as well. Are you tracking some of these companies related to defense sector?
The companies that, the larger ones are the ones that I look at, and among them, clearly BEL is something which has been a favorite for a while. Among the smaller companies, the one that I think has interesting possibilities is a company called Premier Explosives, where again the business that they are in is consumables. As I mentioned, the biggest issue with defense is the fact that most of the orders are lumpy, especially the equipment and the platform level orders. And therefore, it's difficult to hazard a guess as to when the timing will be. I have not tracked Nelco. L&T is another company which is somewhat interesting to my mind.
Okay, Anand, appreciate you taking the time out and joining us. Thanks for being with us today, and have a great festive weekend.
Thank you, and you too.
Anand will have a good time. The weather in Hyderabad typically tends to become really good. But is the weather on some of the mid-caps becoming good? Yash Upadhyay joins us with the Fab 4 stocks of the day. Yash, what's finding its way to your list?
Good afternoon. So first up, we have Dilip Buildcon, and the stock had gained close to 6% today after the company said that it has received 2 EPC contracts worth about 518 crore rupees from Ircon International. Now the completion period for both the projects has been fixed at about 24 months and would augment their already robust order book of a little over 14,000 crore as of September 30th. Moving forward, we also have Aarti Industries, and this one has been on a tear, gaining for 11 consecutive trading sessions, with today's move coming on the back of the board's decision to buy back about 8 lakh shares or 1% of the overall equity at about 1,200 rupees per share. Also, we have Naveen Fluorine on our radar, and this one is up about 5% today, with the move coming on the back of the company's decision to expand its existing manufacturing facility in Madhya Pradesh for an investment of about 115 crore rupees. The new plant will come on stream by June of 2019, and the capex for the same would be funded by a combination of both the internal accruals and debt. Lastly, rounding off the Fab 4, we have Talwarkar Fitness, and this one had gained as much as 5.5–6% today after the company received the all-important NCLT approval for the demerger of its lifestyle business.
Yes, I thought some of the liquor stocks will feature on your list, because usually when you start the weekend, he loves to talk about those stocks. But I have a news for you. United Spirits has touched its fresh 52-week high, at least in today's trade. Thanks a lot for getting those Fab 4 stocks off the day. But on that note, let's also do a check for the European markets. Let's see what they are doing heading into this extended weekend. I think the CAC and DAX right now actually trading in the red, but FTSE is just about trading mildly in the green, so it looks like a muted session for the European markets as well. And remember, the volumes for the equities in the global markets now will be on the lower side, as majority of the institutions, they head to celebrate Christmas as well as New Year. But back home, we'll be working on the first, Neeraj.
Try telling that to the exchanges, not to me. But yeah, promises. The next 3 days are good, so let's just focus on the short term and not really the long term. And if I focus on the short term, one space that is doing well is upstream. ONGC is up 3% now and is trading at the highest point of the day. Good going for this one. Sarvendra, any thoughts here? ONGC, would you trade it at the current levels? Would you buy it?
No, yes, I would say that again, if as we were mentioning, there's always some stocks when you have a negative view, there are still some stocks which qualify in your buy list, but you don't want to put them. But yes, ONGC again qualifies into that, and the rationale there is that from the time, not now, but for the last many quarters, we've maintained that final targets for the WTI crude basket is in the region of around 70-72. So there we are right now, it's 57-58. So if crude has to go up now, and since ONGC till now has not kind of given you those returns which probably would have come on crude, my sense is that definitely it has a lot of catch up to do, and 220, 230 is a positional target that anybody wanting to buy and hold deliveries or want to kind of have a 1 to 3 month kind of a horizon can look at those targets. Definitely a buy side candidate list, and you can have a suitable stop loss and look for the 220 target range going forward next 3 months.
Yeah, somebody came out with a report recently, I'm forgetting the brokerage house, Macquarie I think, the target of 290 on ONGC. That was about a 60% upside to the prevailing market price then, currently at 193. 3% higher is ONGC. You know, Rajat Sharma should be a happy man. He used to like, I don't know if he still likes ONGC or no. CEO at Sana Securities joins us on the show now. Rajat, good afternoon. Thanks for joining in. Do you still like ONGC?
No, so you're right, Neeraj. We used to have ONGC in our portfolio. We made a lot of money on that stock, and I think we sold it sometime after the bonus came out. The reason was, you know, when we had ONGC in our portfolio, crude prices were like really low, and it is for me surprising that some of the brokerage houses are coming up with such high targets for, you know, essentially what is an exploration company. Personally, I believe with crude prices rising the way they have, I don't think ONGC would repeat the kind of performance it did. You know, as I said at the time that we had it, this has been a, you know, we've been very happy with this purchase and made a lot of profit on the stock. Having said that, fundamentally, this is a brilliant stock. It still has about over 3% dividend yield and, you know, no debt on its books. So very, very healthy reserves too, government owned. So, you know, the management is good. So if, you know, you're trying to buy something at relatively okay valuations and hold in your portfolio for a long term, this is one stock you could look at adding. That said, we don't have it. None of our clients have this in our portfolio. So this is a stock that we bought and we've exited actually. More than, you know, more than oil exploration companies right now with crude prices on a rise, I'm actually quite positive on both the natural gas players, Mahanagar Gas and Indraprastha Gas Limited. Those are the stocks which I think going forward would perform better than, you know, oil exploration or even oil marketing for that matter.
Even oil marketing for that matter. Okay. So some gas names, but what's the rationale here? I mean, what numbers are you working with, Rajat? Because these gas names, IGL or MGL, as has the market, but these stocks have had a fabulous move the last 6 to 12 odd months.
You're talking about Mahanagar Gas? And,
Yes, yes.
The gas company? No, I think neither of these companies have done outstandingly well in the last 6 months. I think in the last 2-3 months, these stocks have actually corrected. If you see, the revenue in front of me, if you see the revenue for Mahanagar Gas, it's sort of the top line has been in line at about 2,200 crores for the last 4 years. In the last 2-3 months, if you see, the stocks have actually not performed as well as they should have. Personally, I believe that there would be a lot of expansion in the market for these companies, and the revenue, the top line should expand, and the EBITDA and the net profit for these companies, the margins have been maintained since they got into business, and that should be maintained. Personally, I believe the volumes will grow a lot going forward. So that's the rationale for getting into we hold Mahanagar Gas. We recently recommended that.
Okay, so MGL has come off, but IGL hasn't. IGL has actually had a good last 3 months as well, and a great year as well, about 80% odd. But yeah, MGL certainly has come off. So Rajat liking MGL. Rajat, you like IGL as well, very quickly?
Hello.
Yeah, but out of the two, we would have chosen MGL, as you said, that it's available relatively cheap, and a lot of the big fund houses have recently purchased that. I think Motilal Oswal also has that in both their PMS portfolios and in their mutual funds. So going forward, I do expect a lot more money to come into this stock. Personally, I like the market also where Mahanagar Gas operates. Even though I'm from Delhi, I like the region where in Bombay and around where Mahanagar Gas operates a lot more, and I think that's where. It is surprising to me why IGL did better than MGL, but in the short term, it's really difficult to say. They're identical business, just operating in different geographies. So going forward, I believe this would be a better stock to hold if you had to choose between the two.
All-time highs for the Nifty as well now, and we are 8 points away from nudging the 10,500 mark as well. I know we have to go to Navneet, but just because we've hit these highs and there's a bit of a pullback in the last few minutes of trade. So the Sensex at all-time highs, Nifty at all-time highs. You couldn't ask for a better Christmas present, to be honest. And I don't think last Christmas, not when you gave me a heart, but last Christmas, nobody anticipated that we'll have a 27-28% rally, to be honest. It was just those fading moments of the markets getting impacted because of demonetization. This year, we are at all-time highs for ourselves. Rahul, what do you do for the Nifty here on? Would you buy in the last leg and take home the trade into the long weekend?
Yeah, as we discussed earlier, that any correction should be bought, and even at current levels, one should buy with a positional view. I feel then again Nifty can test the level of 10,575. Okay,
Sarvendra, very quickly, not a long answer, but would you initiate a fresh long on the Nifty at these levels?
No, not at all, not at all. As I said, last Christmas I was among the very few who were saying that it's a bottom at 7,900, and my sense is that move has finished, and I just now put a call. I think that you are just in the last 50-100 points for the Nifty, and you should see a substantial correction coming forward. I see all clear indications on my proprietary setups that this party probably will get pricked either first week of Jan or the last week of December.
At some point of time, we'll get in Pradeep to talk about what he's thinking about the charts as well. Not a recommendation, but just if there are any channels or flags or buckets that the index would have broken. But before we do that, Pradeep, let's go across to Navneet to talk about what are the stocks that may enter the F&O ban or come out of the F&O ban on December 26th. This would be a good trading indicator. Navneet, what's on your list?
Well, there are almost 12 stocks which are currently into the F&O ban. So I just have one on my list today. Jain Irrigation, yesterday the total open interest as a percentage of market-wide position limit was almost 93%. Now remember, for a stock to enter into the F&O ban, it has to breach the 95% mark. And if you go by the trading activity that has taken place on the futures as well as the options side, it suggests that 95% mark can be breached in today's trade. And just a disclaimer here, the trends do change in the last 15 minutes of trade. So let's now look at the stocks which can move out of the F&O band. Two stocks, I remember highlighting them in yesterday's trade, but I guess they missed it by a whisker. So these are the stocks, JSW, Energy, HTIL. For a stock to move out of the F&O band, they have to breach the 80% mark, and it looks like from today's session they will be able to do that. So these are the stocks to watch out. In fact, we've seen good moves in last 15 to 20 minutes coming up for JSW Energy. I guess it's trading somewhere between gains of 2 to 3%.
Okay, we are 2 points away from 10,500, almost nudging there. I know it's not a really big level, but hey, around the Christmas time, if you hit a psychologically important level, if it is in the first place, then you would be happy with it. 10,498 for the Nifty now, just up, all right, 10,499, it's just a stone's throw away from 10,500. But for all practical purposes, we're closing in, or likely to close in, at fresh all-time highs, which is statistically a fairly important mark ahead of the Christmas mood as well. And we'll get in Darshan and Yatin in just moments from now to talk about what dealers are saying. But Rajat, at these levels, with all-time highs on the indices, are you making large, fresh investments, either on the Nifty stocks or in the non-Nifty stocks as well?
Yeah, Neeraj, last time I was on your show, I spoke about the two stocks that we've recently added to our portfolio. One was Moil Limited and the other was RS Software. IT as a pack, I really like IT stocks right now, both because, the large cap IT is significantly undervalued. And personally, I think going forward, you'll only hear better news from where it is, because, it can't get projections and, outlook cannot get lower than what it was. I believe Accenture came up this morning or yesterday and up their guidance from the lower end. It was just 1%, I know, but I think a lot of this kind of news will come out, and the volumes and the revenue for these companies should look good going forward. RS Software, having said that, is like fairly illiquid, meaning the stock does not trade very much, but it's a debt-free company run by very able management, and it's in all the right verticals: data analytics, client customer acquisition. I like that stock a lot, so that's something we bought. Moil Limited is another stock that we bought. Now, you were talking about Nifty going forward and what it has done. Just for somebody who likes facts, somebody just sent me this, and I've actually checked this myself. For the year 2017, Nifty has actually gone up so consistently that it has actually gone up every single month barring the month of November. And the last time this happened was in 1988. So that's how far back this happened. And this is, it's a fun fact, but going forward, I think I also believe that at some point there would be a disruption to this rally, because we are extremely overvalued no matter how good the macros look. But, that should not keep investors from buying into stocks that are right now available very, very cheap, because personally, I don't think that disruption, whenever it happens, will result in any kind of crash that it did like it did the last time. Personally, I believe going forward, earnings will improve and improve very aggressively. Other than price earnings multiple or valuations, if we're to look at, everything else is really, really good, whether it's price to book or macro factors. And earnings have not really improved for the last many quarters for one reason or the other. There's demonetization, GST, and now when all of this actually starts oiling the machinery and things start moving, you will see that earnings would improve quite aggressively going forward. So I think a lot of these valuations may cool down because of earnings improving. Yes, I do believe there could be some correction in stock prices, but frankly, I don't see any crash irrespective of all the geopolitical things and stuff that you keep reading about. But hey, I mean, nobody ever sees a crash coming, do they? So you've got to be careful in your stock selection for sure.
100 is the mark that we have seen, very close to that. We are still quoting there. 10,500.1 is on my screen, up 60 points now. So that's the record we have been waiting for, and we have been waiting for it for a really long time. Neeraj, you just asked me about my views on Nifty, and I remember in October when we started doing these technical links, I had done something on Nifty, and I had told you that 10,460 is the level I'm looking at. Market has to cross it and close above that, and this level came in October. So the 40 points took us 8 to 9 weeks, and now we have reached 10,500. So this zone or level around these mark is very important, and we should wait for a decisive breakout. If it happens, then maybe 10 to 15% here on, which is a good big move that we can expect over next several quarters.
Not a
remember-
prediction,
no,
mind you, not a prediction at all from Pradeep.
But even a lot of technical analysts, not Pradeep, we were chatting with, they said that Nifty has to convincingly first take out that levels of 10,500, which also means it has to trade above that mark for the few 4 to 5 trading sessions. I also want to pull up the India Volatility Index. It's dropped 4.5%, and we were mentioning this. It's going to augur very well for Nifty in the coming trading session. And today, actually, it fell below the mark of 12. And not only that, throughout the day, options data was suggesting something. You saw unwinding coming from called writers, which was a very, very positive sign. And once again, put writing was seen around those mark of 10. Not only 10,400 needed today, 10,500 put strike, saw major writing. So I guess the options data somewhere was suggesting, but we've hit the 10,500 mark. That's good news ahead of Christmas.
Yeah, well, IT is playing its part, Reliance is playing its part, SBI is playing its part, so a clutch of these names seem to be doing okay. Now, before we talk about the index and before we talk about the closing strategies, it's time to get in a sense of what dealing rooms are recommending in the session today. Then we'll take in some closing strategies from both our technical experts and then maybe some further views on the Nifty as well. But firstly, Darshan and Yatin joining with their channel checks. Good afternoon, both of you. Darshan, to you first. What are you picking up from your sources?
Yeah, so overall the market looks good, and that's the sense that we're getting it. But individually, some of the stocks that are being spoken about, there is I think that is again Yatin who's going to speak on that. But yeah, yeah, but KPIT, yes, KPIT is something that it's absolutely flat in trade, but there's a buzz of a possible corporate announcement that could come in very, very soon. That's something that we heard on the dealing rooms. Apart from it, Sun TV, it's been doing well. It did well extremely on the news that came out yesterday, again about the 1,000 level mark in trade today. Some of the domestic mutual funds are actively accumulating Sun TV, and the final one is Alembic, and this one has had a very good run of its own. Some of the HNIs are actively accumulating. Recently launched one of the Bangalore projects, and there seems to be significant amount of traction as far as the counter is concerned. So Alembic is still something being spoken about, and yes, you can speak about Wokhart now.
Wokhart, because I think probably I'm the PCR's favorite, so they usually fire my graphics first.
PCR, for people who don't know, the jargon is production control room. But nevertheless, what are your dealing room sources telling you?
So Neeraj, Wokhart is something which ran up quite well in the past few days. We are looking at some profit taking which is happening at current point in time. So dealers are expecting further profit taking as far as Wokhart is concerned, and probably that is the reason why the stock is down almost little over 2%. Century Textiles is the other one which is showing some strength. So dealers are anticipating that the uptrend from here on will continue, and probably that is the reason why they're maintaining a BTST as far as Century Textiles is concerned. That is buy today, sell tomorrow kind of a strategy. And in the cash market segment, watch out for Greaves Cotton. That stock is up on decent volumes. So dealers are indicating that at this point in time, a lot of HNI accumulation is happening as far as this mid-cap stock is concerned.
Okay, so thanks, Yatin, for all these details. So these are some of the stocks the dealing room is talking about. And if you could look at, the pattern that we were talking about earlier, what we discussed in October, if you zoom in here on this laptop and you can really see it. So if you look at last few candles, for last 3 months, we are now stuck around this red line, which is nothing but around 10,460, which is 2x Fibonacci number as we discussed last time around. This is basically, the amount of correction that we have seen from the top to bottom in 2008. We have regained the similar amount on the upside. And there are some important key levels on the Fibonacci series that work as support and resistance, and this is what the chart has also seen. So what I talked about, the 10 to 15% kind of an up move here on, if you want to talk about, we have to sustain this level and we have to close above this level at least for a few weeks, I would say, because we are talking about next few quarters or maybe years. So on the longer term charts, this was a very important level, and we have been struggling to get a decisive breakout for last 2 to 3 months now. Let's see if we can now sustain and move up. Then we can probably talk about a fresh leg of up move. Interestingly, what we have seen, over last 1 week or so, we have been able to find several stocks that were consolidating for a long time and it seems they have started, a new leg up. So maybe market is kind of moving and getting ready for a fresh up move from here, but index will definitely decide on its own.
Well, let's ask our experts now those questions as well. And before we talk about the Nifty trades, and I think we've gotten a trade each from both Rahul as well as Sarvendra on the index. So let's first take in a closing strategy before we talk more about anything else on the Nifty 50 that may be finding their way to the list. Rahul, to you first. One top BTST or STBT as the case may be.
I would go for Bharat Electronics. The stock, after 2 days of consolidation, the stock has it is trading very strong, supported with volumes. So definitely at current levels, one can buy with a stop loss of 183, and it can test the levels of 194 in next week, maybe on Tuesday.
So BEL is your BTST.
Yes.
Okay, Sarvendra, one top BTST or STBT.
Neeraj, I will go with an STBT, and I gave a call on DHFL, but if someone wants to do that trade BTST also, then you can revise, you can have those levels as well. For tomorrow or for the next session, I would say that 585 is doable for DHFL going forward, and the spot levels. Keep a stop loss at 596.10, and you can take a STBT on DHFL.
Okay, interesting. So, well, one STBT, BTST, both on a non-index name, but look at the index names. TCS up 2%, yes. Bajaj Finance, I think, has made its way back from those lows that it hit a recent time a while back. There is strength today in autos by and large, so it's not just Bajaj Auto. I think I've seen a couple of other names, including Maruti Suzuki, which is trying to make a pause or stall its downtick. And a couple of other names like Eicher, which are not doing too badly either. Anything on the Nifty, Rahul? Nifty 50 stocks that looks interesting?
Another stock, not into Nifty 50, but definitely Bajaj Financials Limited is looking good at current levels. Stock is on a verge of a breakout of last 4 to 5 days of consolidation. It is not a BTST, but it would be a positional call. From current levels, one can buy with a stop loss of 1740. And upside in short to medium term, the stock can test the levels of 1850.
Pull up the intraday chart of Reliance Industries. Neeraj was mentioning about the Nifty constituents. I guess the contribution in the last 15 to 20 minutes that one has seen has actually come from Reliance, because it had seen a fall, but once again that pullback that you've seen in the last 10 to 15 minutes of trade has probably contributed to the gains that one has seen on Nifty. So Reliance currently at about 921. Sarvendra, would you initiate any trade here?
See, I think Reliance is one stock probably which is range bound and it's been tapering down and narrowing into a triangular kind of a small triangular consolidation, not a very copybook pattern, but I think the breakouts are still missing and the breakdown is also missing. So we are kind of consolidating between the 50-day average and a trend line coming in. So I think that trend line is at around 935 levels and the average is close to around 900 levels. So I think 900 or 935 would be a trading range for Reliance till it breaks either side. And yes, being a heavyweight, it can actually move the Nifty either side. So definitely a counter to watch for into the next week's trade.
Okay, one more stock I want a technical view going. Pradeep did a chart on CED, but look at MRF. That too has surged about 3%. In fact, this week the tire stocks have been buzzing. Rahul, on the charts, I know MRF stock price is like 73,000. It's very difficult for a retail person to take any trade. But on the charts, how does it look?
Yeah, after a very long period of time, the stock was moving around in a rounding bottom formation. The range was 74,000 on the upside, and on the downside, it took a pause around 60,900. And after quite some time, it has formed a rounding bottom formation. The stock is on the verge of a breakout of a lifetime high. So definitely, larger degree move will come very strong from these levels. So, but I would not recommend to just go and buy in one shot from today itself. One can buy slowly and gradually from the current levels and corrections till 70,000. Because in long run, in next 12 to 18 months, I feel that stock can again test the levels of 80,000, 82,000. So definitely any correction should be used as a buying opportunity, and one should place a strict stop loss below 66,000. So one should wait for some correction and then enter into the stock.
Okay, markets ending at record closing highs. Let's sum up how the day has been. Then we'll talk about how the week has been as well. And Pradeep starts off with the large cap activity in the day today.
So let's look at Nifty first, 10,490, very close to 10,500 mark, but not quite there or above that level yet. But a half century for Nifty and almost a century for Nifty Bank, up 85, 86 points at 25,600. In fact, mid-cap and small caps also did well, especially the small cap index was doing better because in broader market we saw several stocks hitting the upper circuit in small cap space. There were several 20% plus kind of a move that we have seen in today's trade. So there was a larger participation in the markets today, but let's look at which were the stocks that really participated in the movement of index, Sensex and Nifty. So key contributors on Sensex here on our screen now, ONGC up 2.5%, but sector of the day was definitely IT, where we saw Infosys, TCS, Wipro and several mid-cap stocks moving up with good volumes in today's trade. A few more contributors, if you look at Bajaj Auto, Tata Motors, DVR, that really looks interesting. Tata Motors, DVR has moved up with good volumes today after a while. If you look at some of the key losers, on the other hand, we had Tata Steel down 1%, IndusInd Bank, Hero Moto and Coal India. These were a few big losers in today's trade when index was actually hitting record levels.
Good day for the markets and even for the broader markets, which have been outperforming in fact this week. So let's just look at a couple of counters which were active today. Indigo was up and about. In fact, that counter closed almost at day's high, as you can see, up almost 4%. Indigo closing around those levels of 1,181. The tire stocks have been active this week. So you had stocks like CEAT, that was up almost 1.5%. Towards the end, actually, it cooled off a bit, but yet closing in the green. And besides CEAT, you also had MRF, that saw good gains. In fact, closing almost at day's high with gains of around 3%. DB Realty, which has been doing well after the 2G verdict came out yesterday, it was locked in upper circuit, and today, right from the word go, when the market opened, the stock was locked in upper circuit with gains of 20%. The other stocks which were locked in upper circuit was Binani Industries, that also saw gains of 20%, and stocks like Ester Industries. Now, this is a stock which was actually consolidating between those levels of 35 to 45, but in the last 2 days, it's seen a significant move on the upside. So closing above the mark of 50, and Reliance Naval was quite active from the word go. Not only that, among the futures and options counters, you had stocks like Engineers India, that saw gains of almost 6%. Adani Power was up and about. Adani Power actually saw, that was up 6%, but two stocks which cooled off were Reliance Communication and IFCI, which were pretty active yesterday. Remember, they were in the F&O band for today. So the move was largely on back of unwinding that one saw on the futures and options side. Neeraj, are you interested in doing the close, or should we get the Santa in?
No, we can't get the Santa
Why
in
not?
for
He's
now.
already there.
Oh my goodness. Merry Christmas. Merry Christmas, Santa.
Merry Christmas.
Okay, now that we're done with the fun and games, let's talk about the market close. Now, my Santa will excuse you for a few minutes for the time being, but thank you so much for coming in. Let's bring up the Nifty 50 heat map and show you if indeed the markets have cheered this Christmas spirit or no. And yes, it has. You know, aside of talking really just about what's happened on the day today, let's get the Nifty chart for the last 12 months. And the classic adage of buy fear and sell greed comes into being. Last Christmas, we were at these levels. This was right about the peak of the fear of demonetization. From these levels, we've had a massive rally and are now closing in at fresh highs for the index. It just shows that if you indeed went out and bought fear at the right time, of course, you stood a chance to make a fair bit of money as well. It's been a great year, it's been a great week, and it's been a great month as well. Let's hope that the cheer continues. Final thoughts from all our experts. Rajat, to you first. It's not exactly fearful right now, but what are you doing? What within the index components would you buy? If you have a mid-cap stock idea, it'll be great for our viewers to hear from you.
Yeah, so Neeraj, within the index, as I said, we're buying a lot of IT names. We already have Infosys, TCS also in our portfolio. Outside of the index, again, it has to be IT. So RS Software, as I said, one stock that we recently added to our portfolio. Moil Limited was the other stock that we recently purchased. Besides that, I still like, the consumer theme. As I look at my portfolio, we've got Kanza and Nerolac in our portfolio. We're still very positive on ITC. I think that stock has not done much after the last year's excise duty hikes, and I do believe once prices of cigarettes are raised, margins and volumes come back and things adjust. So consumption, IT, Pharma is one sector that I'm looking very, very carefully. I mean, with the new companies that have been approved in the US and the new competition that has, eroded the profitability for these companies, I think going forward, once they're out of their steam and marketing budgets, the same old IT names will come back. So that's another sector that we're looking at. So, broadly around this space, staying somewhat cautious on financial services and banking.
Okay. Rahul, your thoughts very quickly. What levels should one watch out for the next few days?
I will just take some time because if you look at from this December to next December, if you want to see from March 2015, the high was 9,109. It went down to 6,825. Again in 2017 March, it came up to again those levels. So that was a correction of 2,294 points. If we add 2,294 points to 9,119, the target comes for 11,413 for 2018 December. So definitely larger degree chart seems to be very positive. The yearly candle is very strong. It is on it has given an upside wage breakout. So definitely any correction should be used as a buying opportunity for long-term investment. Now if you talk about next week, once Nifty crosses 10,500 on Nifty spot, one should already buy Nifty futures, but one can do a high risk trade, which is start writing calls of 10,450 as well as 10,500. So 10,450 call is coming at 37 rupees, so it would get zero.
Thank you.
10,500. I'm sorry, 10,500 put would be 54.
Now.
It would become zero.
No, but thank you so much. Appreciate your commitment towards the answer. It was very difficult to keep it then in the wake of the Santa coming in and distracting him. But Rahul, thanks so much for really your time as well and giving us your thoughts. Much appreciate this. Sarvendra, Merry Christmas to everybody. Sarvendra, Merry Christmas to you as well. Hope you make money even if you're going out and shorting the markets, and hope all viewers make money irrespective of whether they're shorting the markets or investing afresh in the markets.
That's right. I think it's time for us to wrap it up here. Here's wishing all our viewers a very happy and Merry Christmas. Go and have fun and have a good New Year. But I think we'll also have to thank our guest, Rahul, Sarvendra and Rajat. Thanks a lot for joining us today. It's goodbye from Pradeep, Neeraj and my side. We're signing off and we'll see you on Monday. No, Tuesday. Monday is Christmas.
All right, Merry Christmas, everybody.